Should we buy or sell the Great British Pound / the Russian Ruble? First off, read this disclaimer carefully. And do your good deed of today by liking and subscribing. So we have seen some very huge move in this pair. So it's 18% from the 52-week low, which is huge, in the forex market, minus 61% away from the highs. So we've seen a very substantial weakening here of the British pound in this pair, and it is the worst performing here. So huge move. Here is, the long-term chart, weekly data points, and we see that, looking decades into the past, we have never seen moves like this. Extremely sharp move up, but then just completely falling to pieces, not, that much later either. So a huge move. And this pair is interesting because when we look here at, the last 3 weeks, you can see this, and this. You see that there is a change here in how low the candlesticks go, and also the wicks. So there is some buying pressure at these levels. So interesting. And when we go back here, let's draw this line. So potential horizontal support way back here, here, and here. So this is an interesting level where we are currently seeing bulls step in. Let's go to the daily data points. So here we got, a very key pattern in the markets. So let me just draw it in. Get a bit bigger here. So it looks a bit like an inverse head and shoulders pattern in development. Inverse head and shoulders, they are bullish. Obviously, they don't always play themselves out. Currently, it is, however, showing some very constructive development. Another key thing here, like that, let's look a bit here at these moving averages, because you can see here that in this pinkish color, this is the 10-day moving average. And it has gone from being this. Okay, let me just get the right color here. It was a very clear resistance level. So it was a place where people went short the British pound. But as you can see, the bulls have been able to reclaim it and to sort of like protect that level. The next key level here for the bulls is definitively this purple 20-day moving average, which we can see also has been a very important level here for the bears. The bears have been able to push us below it, but they haven't been able yet to sort of like get an accelerated move downward. So there seems to be some very interesting buying pressure at these key levels. And given how far the Great British Pound has gone down in this pair, it means that if we do get some clear signs that the low is forming, then there could be a very big move up. At least big for being in the forex market. Looking here at the RSI and the PPOs, in terms of the PPOs, we are at absolutely extreme, unprecedented levels. So very oversold. On RSI, we are also in the lower end of the range. And PPO, we are at extreme levels that some short sellers definitively will find intimidating. Looking at the daily data points here, we do have a buy signal on the MACD. We do have a bit of some breakout behavior here on RSI. So here in the laboratory, I wrote inverse head and shoulders and 10 daily moving average support. So I give the technicals a 4 here. This looks more favorable to the bulls than the bears. Let's look at seasonality. So to the right here, then we do get the actual pair, British Pound / Russian Ruble. And over the last 5 years here in green, we do see that the pound tends to strengthen heading towards later June. In blue over the last 7 years, the same thing. And then here in red over the last 10 years, yeah, it strengthens into the late part of June. That is when we see some weakening of the pound, and then a protracted strengthening heading towards September. To the left here, now, then I'm looking at it against the US dollar, the reserve currency. So over the last 5 years, June is a mediocre month overall, a bit bearish. But over the last 10 years, then June all of a sudden is one of the strongest months. And then big picture over the last 20 years, then June is in top 3. So it's the third, best month for the pound. And we are now in early June. So given that, the current month is so, strong, I will give the bulls a 5. It simply is one of the best months to be bullish on the British pound. So yeah, the odds that this will work out for the bulls, it has now increased. When it comes to the fundamentals, as I have said, before, fundamental, / macro analysis in Forex market, it is very complicated because what we want, of course, is to look at factors that are not fully priced into these currencies. Of course, one could talk for hours about the different economies in question here, but then we will talk about things that are known. So the key thing here is to sort of take into account what is not currently baked into the current price of this pair. And I do think that given the very protracted weakening we have seen of the British pound, in all likelihood, a lot of the bad news have been priced in. The massive inflation that we are seeing in, the Great Britain is also, it's been in the news, so it's not like a secret, that people are not aware of. It's publicly known. So I do think I will lean very slightly bullish. I will give the bulls a 1 here on the fundamentals. Very slight. It's just that I think that, the chart sort of speaks for itself. We have seen a very sharp move, and now there's more of an even battle here between the bulls and the bears. And let's not forget this move either, between, if you take here as an example, early November 2021, all the way up here until early March 2022, the financial markets were extremely bullish on the Great British Pound until they went very bearish. So when you have these situations where the market has a very extreme counter move, then in all likelihood, the real truth about this pair, it's somewhere in the middle, that is very likely. So yeah. Okay, so let's look at, some correlations. Long term, we have 58% positive with the S&P 500. We have only 9% here with EWU, which is the United Kingdom Stock Market ETF. Then we have minus 19% here with RSX, which is the Russia Stock Market ETF. Then 34% here with Brent oil. Looking at daily data points, then we have 8% with the S&P 500, minus 3% with the United Kingdom, minus 22% here with Russia, and then we have plus here, 26% here with Brent. So we don't get any very strong correlations here. But it certainly seems like the strongest we do get long and short term here is with Brent, and it is actually positive. So let's just look a bit at Brent, but I don't think we will do any kind of extensive analysis here, simply because the correlation was very modest. So here we have the weekly data points, and yeah, we do have some signs here of a burgeoning breakout. Still sort of very coiled. We have seen some cool down here on RSI and the PPOs, but we are still a bit high. On the dailies, we've seen a little bit of a cool down there as well, but we have recently seen these rather small time cycles. They have been pretty tradable. The time cycle suggests that we could see some pullback heading towards the 7th of June. This is the currency pair versus Brent. We have seen that we have just shattered all kinds of potential horizontal support. We are now, we have fallen down to like a potential cluster of support around here. But given that there wasn't really a strong correlation here, we just have to be a bit careful, at least because what we find here is not really. It doesn't, to any significant degree, predict price action for the actual pair. We have fallen, to a very low end of this RSI range. Previous times where we have been here, we have seen, some bounces, meaning the Great British Pound Ruble pair has strengthened vis-a-vis Brent. So let's just quickly look at the seasonality here. Like this. So we usually see over the last 5, 7, and 10 years that the currency pair weakens towards 7th of July and then it strengthens. Let's look at the currency pair versus gold with the GLD. Here we have seen that we have broken below a bunch of horizontal support levels, but we have here as well fallen down to a potential bit of a cluster of horizontal support levels. So that is certainly something that the bulls are going to try to use. Similar here on RSI, we do see that there is something a bit supportish about in regards to this current level, though we have been significantly lower in the past. Looking at seasonality. Yeah, so over the last 7 years here in blue, the currency pair usually strengthen versus gold heading here towards mid-June. When we look here at the last 10 years in red, then the seasonality is actually pretty good. Strengthens towards later June, pulls back a bit, and then we see a significant move higher. I think I will give the bulls 2 here on relative performance. So we end up with a score of 3 in favor of the bulls. The key part of this bullish thesis is inverse head and shoulders. And we also have 10 daily moving average support. Given the technicals, seasonality, fundamentals, and relative performance, we certainly do expect these lines in the sand to hold. We have seen some very big moves in this currency pair. It is true that after very big moves, there is a bit of a tendency for even protracted consolidations to develop. Consolidations can be annoying. If you try to buy the breakout itself, but if you have a consolidation pattern develop, then buying the low end of that range that can be very beneficial. So yeah, to sum up, I think there's more reasons to be bullish than bearish when it comes to this pair. But as always, we do want to have a line in the sand, because if the bears are able to break these two signals, then it is a sign that they have more power than they are letting on at the moment. I very strongly recommend you subscribe to these channels because there will be exclusive monthly video published there. That is when I go through theses that I have published on social media and review them to figure out what went right in those that went right and what went wrong in those that went wrong. But I will only publish it on this and that channel.